Multi-timeframe analysis of any instrument is going to provide you with the means by which you can improve your statistical trading edge. The key concept of trading is to always try to trade in the direction of the trend or trade against the trend. When we know that, we need to ask the question, which trend should we follow? When you use a single time frame, we can use M15 as an example, we are going to find out only the trend that the 15-minute time frame shows us and nothing more. If we add an hourly chart of the same instrument, most time we are going to get a different trend reading. It's always better to stick with the larger time frame when we talk about the trends, but we need to add a few rules to make this work. Important. When you search for the best time frame for multi-time frame approach, always use 4 to 6 time magnification ideally. For example, if you're using 15-minute time frame, the second chart should be 1 hour. If you trade on 1 hour, second chart should be 4 hours. So don't try going with a 1 minute and 1 day, because how much 1 day is still a great chart, that much we won't get that great representation on a daily time frame that can, technically speaking, help us with our trading. The key things to check with multi-time frame analysis: current market direction and phase, support and resistance levels, Fibonacci levels, chart formations. So basically, everything that we learned so far, we want to combine into one approach. So nothing difficult, but we need to pay attention on those small details. Advantage of multi-time frame trading: you are going to get a better entry points, better risk reward. It's because you are going to use a few time frames. You are going to get a better confirmation when the price is going to turn. So you're automatically going to get much better entry point. And with that part said, with the better entry point, usually you are going to increase your risk reward. So instead of getting 1 to 2 risk reward, you can easily move to 1 to 3 to 1 to 4 when you use multi-time frame approach. Better perspective for what can happen. You are going to see that larger picture. So you're not going to be limited of what can happen right now on that 15-minute time frame that you're looking. You are going to get a better picture. And in case something happened like in news that moved the market, let's say 100 points in one direction, you can easily get back to the game if you're using multi-time frame approach. Works for day traders and swing traders, so it really doesn't matter what kind of a trader you are. This approach is going to help you to increase your risk reward and, in my opinion, the overall win rate. Disadvantages of multi-time frame trading: new traders may find it difficult. It's not crazy difficult, because you'll see in a second. We are going to do it step by step with you. But a lot of new traders find it difficult because you are going to get a little bit more levels to watch. And then they start complicating that part. But in a few days, I think you should be able to do this kind of the approach really, really fast without any problems. It's just a practice and that's all. Also, this kind of multi-trading analysis will double your work time when we are talking about how much time you will spend on your charts. The good part about the multi-time frame is that it's not like you are going to double your working time every single day, especially if you are using a higher time frames like a 1 hour or 4 hour charts as your second or third time frame, because the market won't change that often on a higher time frame. So keep in mind, it's double your work time, but only once or twice per week. And the part that I see this as a disadvantage is that this part requires a consistency. And you need to decide what timeframes you are going to use right away. And you need to stick to those timeframes. It's going to be less effective if you play with 10 different timeframes on 10 different instruments. So you need to select the same timeframes that you are going to use for every single instrument, and you need to keep following the same thing over and over again. Now, let's see how this will work in a real market. So we have on the left the dollar-yen 15-minute chart, and on the right the dollar-yen hourly chart. So what we can do here would be first to find out the trend. We are drawing that red line to represent that uptrend, and on the 15 minutes we also have that uptrend. So what we can say when we just draw these two lines is that we want to see more bullish action while price remain above the red trend line. I would always go with idea of a higher time frame to be my main trend. So I would only focus on that right red trend line. The next thing that we are going to focus will be a phase. We want to see what phase we are currently in, and this is the bullish market, so we are going to look for a 3-wave move to the upside. Right now we are saying, okay, we are in the third phase. Now, when that's said, what we can do would be to just draw a simple support and resistances that can help us to get a little bit more information where the market should find some place to the upside. And also, what we can add to boost the support and resistance can be adding a Fibonacci retracement levels, just to help us a little bit more. Now, I don't like using Fibonacci on all time frames. I prefer to use it at one time frame. It doesn't really matter if it's 1 hour or 15 minutes. It's more where I don't have much levels and where I can clearly see that trend move. Also, what I can see on this chart would be a flag formation. And I see it much clearer on the 1 hour compared to the 15 minutes. Of course, you can see it on the 15 minutes, but for me, it was easier to spot on the 1 hour time frame. So what we now know, we know that we are in the bullish trend. We know that we are in the phase 3, that seems more or less the middle of the phase 3, so we still have a power to push higher. We have a flag formation that's a continuation formation, and we can look for a breakout of the flag as a potential confirmation that dollar-yen should move higher. We can use that, like we said, that red trend line as our invalidation point at all time. Let's see another example. This is the pound dollar again, 15 minutes on the left, 1 hour chart on the right. So here, looking at the trend on the 1 hour looks just bullish, but I cannot draw anything. So if I draw a few trend lines, I can see that that bullish trend line was broken and that we are now in some sort of a bearish trend, a small bearish trend, but a bearish trend. So in terms of the phases, since we only have, let's say, a 1 leg higher and a small recovery, we can only go and say, okay, maybe we are in the phase 2 right now. We can search for formations. In this case, we don't have any formation, so we can move on to a potential support and resistance levels. And also we can add a Fibo levels. So what we know now more, and when we start, we are going with that idea that we are in the bearish phase 2 right now. We are looking for a potential pullback down to the support levels or Fibo levels and we want to look for a buying opportunity after a pullback. If you want to be more aggressive trader and you want to trade to the downside, you can use that upper red trend line and use it as your invalidation point and try to trade towards that FIBO or support resistance levels. Let's see another example, dollar Swiss franc. So idea is always going to be the same. We are going to find first a trend, in this case look bullish. After we got the trend, we want to search for a potential phase. So on the 1 hour time frame, we can see that we have 1, 2 down, and we are at the beginning of the phase 3. Now, what we know about the phases, that inside of each phase, you are going to have the 3 smaller phases. So on the 1 hour time frame, we can see one move up and then a push down. So we are right now in the smaller phase 2 of the larger phase 3. We can use that trend line to say, okay, while price hold the red trend line, we want to look for a more bullish movements because we are in the early stage of phase 3. Now, to make it even better, we want to draw the Fibonacci retracement from start to end of the phase 1 and look at a potential place once phase 3 starts. Also, you can draw on the hourly chart the support and resistance levels. But overall, look bullish. We want to look for a more long place while red line holds. And it's the most important part that you need to know. We have a lot of levels to watch and looking for maybe a potential formation in the phase 2 that will allow us to enter a long play. Let's see, Euro Aussie. What we see here, we have a downtrend. We can clearly see the downtrend on both time frames. Now, if we look from the phase perspective, we have 1, 2, and 3 phase. So definitely this phase 3 is in that ending stages. I don't need any FIBO to check it. I can compare that phase 1 and the phase 3, and I can clearly see that phase 3 is much stronger compared to the phase 1. But again, we can look and draw a support and resistance levels on the chart just to give us a little bit more information. And also what I can see on the 15-minute time frame would be the wedge formation. What we know about the wedge formation is that wedge formation should appear at the ending stages of the trend. So it's fine, but this tells us, okay, maybe there will be a short-term pullback coming soon. And if the wedge break to the upside, what we can look would be a potential long plays towards that trend line or support resistance. And we can also add a Fibonacci levels. Let's see one more chart. Aussie CAD. What we see here, this price is more or less bearish. So we have 1, 2 legs. So second phase right now. But also we can draw a bullish trend line just because we are in the phase 2. So it's a pullback. We can draw the red trend line to represent that end of the phase 2. After we are done with that, what we can see here would be if we draw a Fibonacci retracement, since we want to find the potential ending point of the phase 2. So from start to end of the phase 1, we can look for those kind of the levels as a potential ending point for the phase 2, but also we can add simple support and resistance lines on the chart. Also, what I can notice over here is a potential flag formation. Doesn't look complete. So what we are looking, we want to see the test of higher resistances or that upper channel line before price push lower. So the basic trading strategy here can be one of two things. Either be aggressive, try to get into a long position if you get some sort of a bullish formation, the smaller time frame, like 1 hour chart, or you can go even smaller, 15 minutes, or wait for that new high and start searching for a reversal signal. Let's get one more example. So Kiwi Swiss franc. On the left we have the 1 hour chart, and the right we have 4-hour chart. So first thing first, we have that spike down pullback. So again, we are in some sort of phase 2. If we look at the smaller time frame, we can see 1, 2, and 3 again. So we are in that late stage of the larger phase 2. We can draw a trend line, but we see on the 4-hour chart that bearish trend line is broken, so we can't use that. But we can use that lower trend lines, and any break below them will tell us, okay, phase 2 is over. For sure, we can just look for up short setups. Also, we can add the support resistances to help us to predict the potential ending points of our phase 2. But overall, let's say here, I don't see it maybe as the great opportunity right now, but we know that we are in the late stage of the phase 2. So maybe it's time to start thinking about the reversal formation, like a head and shoulders, double tops in this case, or wedges, something that will help us to get into the phase 3 early. Also, we have a few resistance levels that can help us with the potential ending points here. And if market don't give us anything, we always have that worst option of waiting for that breakout to happen to give us that early clue that phase 3 has started. How multi-time frame approach help your trading strategy? The proper use of multiple time frame analysis in any market will dramatically increase the odds of improving your trading. We are going to use this approach to understand the direction we want to trade and to get a better understanding of what levels we must know on our chart. We are going to write down things such as direction, support, resistance from higher time frames, major Fibonacci levels, and formations that are developing. We are going to talk more about the multi-time frame approach once we start explaining the system rules. But for now, I can recommend pulling up a few charts and checking how different levels react on different time frames.